We're talking about short-term bonds right now. As we just mentioned, the 1 month above 6%. I was just looking at the 2 and the 3 month. They're at about 5.5. Really attractive yields when it comes to those short-term bonds. As we are on the precipice of a deal, it seems like we're inching closer to a deal. How does that shape your philosophy when it comes to bonds? Are equities attractive in this environment when we're this close to a deal and you get yields like that from bonds?
You know, you could have a portfolio with the bonds complementing your positions in equities. It's unusual in all these years that we can have a portfolio that really gives a return in treasuries or investment grade corporates in this environment. You want to be careful, but you can't dismiss those returns and the safety of the treasuries. And again, investment grade corporates are also offering attractive returns.
Yeah,
so
a lot of people.
You get.
Oh, sorry to cut you off, but a lot of people are talking about corporate bonds. Or any in particular that you're eyeing? Because we often say corporate bonds, but we don't get very particular about it.
Well, you know, we're looking at many of the industrial names, the companies with the strong balance sheets. That's what you want when you're investing in this environment. You want companies with very strong balance sheets, rock solid balance sheets, because not only are we in the debt ceiling scenario, after this, we're going to be looking to see what the Federal Reserve is going to do at its next meeting or perhaps the meeting afterwards. So the market is, you know, wondering, are we going to have more rate hikes and are we headed into a recession? So there's safety in those very strong, high quality corporate bonds and also in treasuries. So the how do I say this? We have the luxury of being in the equity market, but also having protection from the bond market.
All right, let's talk about the broader markets. We had two very big earnings reports. One, NVIDIA, probably the biggest one, maybe the whole quarter. And then also we got a read on the consumer with Best Buy. What did those two reports tell you?
It tells us that, you know, the question mark regarding artificial intelligence, because many have said this is, this isn't new, and it isn't new. We've had artificial intelligence working with consumer services for some time, but that it is going to continue. That's what it told us, that it is not just a, one-day wonder. It has been in the works for many, many years, and that you're going to be working with some of the big mega cap tech names. So it isn't NVIDIA alone. NVIDIA has joined that rarefied air of these cohorts of the big tech, mega tech. You need to be with companies that have strong balance sheets. And so when, again, you see Microsoft, NVIDIA, so on, this is the future. But it's going to be basically not that exciting the way that we hear it in some of the Senate testimony. It's probably going to move into customer service, cut costs for companies. That's what we're looking for.
All right, let's talk about something that's not quite as exciting. We're very hopeful about the debt ceiling, but next up's the budget. So as we have the run up to that budget negotiation, what sectors are you looking at maybe trying to get away from?
Well, in this environment, we're looking still in the industrial space. Much of that is underpinned by the defense names. Now, you've noticed that they are down. They're down because there were questions as to what the budget was going to hold for defense spending. And it looks as if right now that you have Biden's budget, 3% holding, and that's up from last year. It's not what the Republicans want. They wanted a larger amount. But, in this horse trading that's going on, it looks as if that 3% is going to hold. So the infrastructure spending also, you're still going to have that. And that also comes under the industrials. So that is an attractive area. Where we would stay away right now is we don't want to get so defensive as if we're headed into a recession next month. So with the yields up, I don't have to be in utilities right now. We don't have to go into utilities at this point.